Hey, it's Michelle Masacchio with Fit Money CPA, where vet med meets smart business. So, last of the month, that means we're going to wrap up what we've all been talking about for the past couple of weeks, which is the OBBBA, which translated means One Big Beautiful Bill Act. And this is the one that was signed into law on July 4th. And it has brought a tremendous amount of changes to the tax law. And, we just watched some of the prior videos and happy to share that with you. And then, of course, you'll always have the opportunity to pop on down below and get on my calendar. But we wanted to talk about the 4 big moves to lower your taxes while keeping your team supported. Okay. So this is something that you need to do immediately because, well, again, this has been signed into law and we need to make sure we're following that. And of course, we don't have any guidance on it yet. So we're going to do the best we can. So the first thing is the smart overtime structuring. Now, what this refers to is that your employees get a deduction for any overtime that they have worked. Now, one thing I've read says that it's the employee's responsibility to take care of the overtime and be able to sort that out on their tax return. The other one that I have read is saying that it's up to the employer. Now, as far as an employer goes, you do not have to report that on the W-2. W-2 is not changing. So there is no way for anybody to report that overtime on the W-2. It's all going to be in that box 1 where we're used to seeing our salary. So the main thing here is we need to come up with a system so that you can track the overtime. Now, your practice management system may be able to do that, and you can just shoot out a report for each of your employees. But take a look at it. Again, happy to walk you through it. So another one that we want to talk about is the tax efficiency bonuses. So when you're giving bonuses out, you want to make them most tax effective for you. So one thing you want to do is figure out if you want to do a performance-based bonus versus a discretionary bonus. Discretionary, I'm just going to make up some number and give it to them. So, again, you need to decide when you're doing bonuses, which way it's going to be based. Another thing I want you to remember that as an owner of an S corporation, you have something that's called the Augusta Rule available to you. And what that rule is, and by the name of it, you can kind of figure out that it came about by the Masters tournament. What happened is that people were renting out their homes. And at the time, they were required to report that income as rental income. Well, of course, there's court cases and all of that happen. And what eventually became of this one is rental property rules anyway. If you have 14 days or less of personal use in your rental property, then you can deduct that time, that 14 days there. You can deduct that 14 days that you're using your property for whatever. So what happens is when somebody is going to rent out a house for $5,000-$10,000 for the week to watch the Masters, then that $5,000-$10,000 is not taxable to the homeowner. That's a lot of money to put in your pocket that's not taxable. So what, as a business owner, what you can do is you can rent out your house to your business. And what that entails is Maybe you're going to do an employee gathering, cookout, whatever. Have it at your house. Charge the business a fair rental value. And then you pocket that money. You actually take the money out of the business, put it in your pocket, and it's tax-free to you as a person and deductible to the business. Now, it does have to be a legitimate business use of your home, obviously. But just think about how you might be able to do that. Some other things that have popped out of this OBBBA is, we need to build benefits that are deductible. So health stipends, maybe you want to pay for your staff's CE. Maybe we want to use that 125 plan. You might think about installing that in your business. So when we include these benefits, it's actually it's been proven to encourage the staff, to make them feel like they're getting more. So that might help with the retention of the staff. So we want to make sure that all the payroll classifications are adjusted. The IRS is going to be scrutinizing these. We don't know how hard. We don't know when. We know that the IRS is down in employees, but I just saw an article come across that they're rethinking that they're going to hire them back. So another thing we want to do is reassess retirement contributions, especially for you. Are you making the maximum contribution to that plan, whatever that plan happens to be? And if you do have a cash balance plan, make sure you're maxing that out as well. So the adjustments that we're going to be making help reduce the taxable income while keeping the practice strong. So, what we can do is stay present and find out exactly what all of these law changes are going to mean to us. And I will happily relay any information that comes across my desk to you guys. No problems whatsoever. So if you have any questions, just pop down on my calendar and we can discuss them in our Power Profit call. So remember, you run the clinic, we run the strategies. Dream practice, real profits.